presentation. And I look forward to talking with you guys today a little bit about owners, employees, and contractors. During the course of the presentation, if you have questions, there is a Q&A button down at the bottom of your screen. I also have the chat window thrown up that I am taking a look at. So as I'm going through, feel free to ask questions. I will leave a bit of time at the end for sort of your traditional questions and answer, but I'm also more than happy to be interrupted by questions as we go through. So feel free to add them in there and go on. See, we have a request in there for the Zoom live transcript. If you guys can turn that on in the back end while I start the presentation, that would be great. All right, so a couple of different subject matters we're going to go through today. Owners and employees, independent contractors, exempt, non-exempt, some employment myths, and I'd like to hear some of yours as well as we get to that part in the presentation. Some regulations things and some special restrictions things. Boring lawyer disclaimer first and foremost. Sorry for the pause, giving you a chance to read the wonderful wall of text on the screen, but just a reminder that you've heard, I'm sure, from other professionals as you move along. These sorts of things are always generally information for a broad audience. It's not necessarily specific legal advice for you. Feel free to talk to your lawyer, your mentor at SCORE, that sort of thing, to get specific information for your business. That being said, I hope very much to give some guidance as to the questions you should ask, the things you should investigate, and some broad things that are helpful to know. First off, for owner, employee, or both, and the answer starts with, are you a partnership or an LLC, or are you a corporation? Because the rules are different for each of them. So let's start with partnerships and LLCs. Owners who are working in the business, so an owner of a partnership is a partner, the owner of an LLC is a member, are generally not employees. You are not both an owner of the company and an employee. You are considered one synonymous person. When you're getting paid for your work for the entity, you are receiving a guaranteed payment, which is sort of an advance on a distribution. If you want to think of it that way, you will get a K-1 at the end of the year rather than a W-2 for wages. The owners are then responsible for both the employer and the employee portion of taxes, like FICA and the Medicare expenses that go through Social Security. But you may have some benefits, including some fringe benefits that are excludable from income, certain kinds of company assets, certain kinds of other losses that may be carried through. But in general, if you are the member of an LLC, you yourself are not an employee. You are considered an owner and receive a K-1. Same thing is true with a partnership. A partnership is receiving a K-1, not a W-2. The answer, however, for corporations is a little bit different. Corporations allow you to have a capacity to work as an owner and a capacity to work as an employee. There's a little bit more separation there. So wages are paid to you when you're working in the capacity of an employee, when you're doing work for the business, but leftover money that's at the end of the day is a distribution that is being paid to you as an owner. So you may end up with a W-2 and a K-1 in this instance. Big word of caution with respect to corporations, and more than, LLC owners being categorized as employees, this is the one that people tend to have problems with. The reasonable employee compensation rule requires that whatever pay is being split to you as an employee and pay is being split to you, and distribution is being split to you, has to be reasonable. So you can't, for example, pay yourself $1 and then try to treat the rest of it as a distribution to try to get out from underneath the tax requirements. Similarly, you cannot make everything wages and not treat any of it as a distribution. You wouldn't normally want to do it that way. You'd normally want to do it the other way around. So a reasonable employee is essentially asking, okay, if you quit and you hired somebody else to do your job, what would you pay a third person to do your job? And of course, the tax treatment for the wages and the distributions end up being a little bit different for C corporations and S corporations, but all corporations generally have this rule where you've got owners and where you've got employees. Now, before I switch over to employees and independent contractors, why does any of this matter? Why does it matter whether you're an owner or you're an employee other than the name of the form that you get at the end of the year? Well, it changes who's responsible for taxes, whether the business is responsible for them or whether the individual is responsible for contributing their portion. So for example, the partner in a partnership is going to be responsible for making quarterly estimated tax payments, while an employee of a corporation, even if you're the owner of the corporation, is going to be having taxes automatically withheld from paychecks. So it's going to change the way you do payroll. It's going to change the way you account for taxes, and you really want to make sure you're planning for that. The last thing you want to do is get to the end of the year, figure out that you have a big tax bill that hasn't been withheld from your pay the whole year, the way that maybe you're used to having with another employer, and then it causes a lot of problems. Any questions on owners versus employees before we switch over to the world of independent contractors? We have a very talkative bunch today. All right, let's switch over to the next discussion on employees and independent contractors. The first rule of employee versus independent contractor is you cannot control this by agreement. Even if the business and the individual agree on what they want the relationship to be, the law will interpret it based on the facts of how that relationship works. So even if you've signed an independent contractor agreement, that doesn't mean that the person's not an employee. The IRS and the feds will look at the nature of the relationship between the parties, regardless of what you title it. Now, that's not to say that those kind of agreements are useless. The test for whether you are a contractor or not is multifaceted. There's a couple of different factors, and having an agreement like that helps split things apart a little bit. And so it allows you to go through and see, it allows you to go through some of the factors that I'm talking about and have them in a written agreement format, so that way you can go through and control it. And so you can plan for some of these different factors as you're moving along. Typical factors in the employee independent contractor space include the nature and the degree of the control, the permanency of the relationship, opportunities for profit and loss, the degree of independent organization. That's all well and good, but let's dive into a couple of examples here because I think that'll be a little bit more helpful. Factors or things that tend to make someone an employee are that they work at the company's location during the hours set by the company. That makes you look like an employee. Whereas a contractor might set their own schedule. They're told to complete some task, but the hours they're told to complete it in, the hours they have to have, makes you more of a contractor. Now, that doesn't mean you can't have contractors with set hours. You can. And that doesn't mean you can't have employees who set their own schedule. You can. But these things tend to lead towards one side or the other of the equation. Employees will follow the company's instructions and procedures and manuals, while independent contractors will tend to use their own judgment, their own methodology. So they're told what the end objective is, but they give us their own spin on how to get there. Independent contractors tend to provide their own tools and their own workspace, where employees tend to be provided tools and workspaces. Employees are paid on an hourly basis regularly, and they accumulate things like vacation days and sick days. Independent contractors tend to be paid more on a set rate per task or per week or per month. They don't have vacation or sick days. They just don't schedule themselves when they're not going to work. Again, you can pay a contractor on an hourly basis, but having someone be paid in a different manner tends to make them look more like a contractor than an employee. Employees tend to have an indefinite duration for the relationship until they either resign or they are fired. And the relationship ends after a set period of time for an independent contractor. This is going to last a month. This is going to last a year. This is going to last till the end of this project. Confidentiality and non-compete agreements are sometimes present for employees. You can have confidentiality agreements with independent contractors, but non-competes don't really fly. They're independent contractors, meaning they should be able to be independent and go work for someone else, even in the same industry doing the same thing. So they can keep your information confidential, but it doesn't necessarily mean that you can block them from working somewhere else. Again, lovely. Now we have some background on employees versus independent contractors, but let's talk for a minute about why that matters. So Employees come with them a number of different requirements, some of which we're going to dive into a little bit later, but I'll start here so we start to get a setting for it. Employees are going to have certain restrictions on things like minimum wage that you have to pay them. When you have to pay them overtime, you have to withhold taxes from their pay. You have certain laws you may need to comply with to protect against discrimination. You may have certain obligations to accommodate medical conditions. You may have a lot of different things and rights which are geared there. Independent contractors tend to be a little bit more of the Wild West. You tend to be able to do lots and lots of different things. You don't necessarily have to pay minimum wage. They might be getting, below that for an hour, but if what they're doing is, a set task for a set price and they agree on it, that's okay. They tend to, have less tax. Well, not less. You have no taxes to withhold. You're just telling them at the end of the year, this is what I paid you. You're responsible for your own taxes. And in general are less complicated to keep. So a lot of times what employers, especially small employers, end up doing is trying to characterize their staff as independent contractors to simplify what they have to do. That's usually the way it goes. You don't normally get employees who are trying to opt out. You normally get people who are trying to keep them as an independent contractor. But that comes with its own dangers, because if you misclassify them, if you designate them as an independent contractor and then somebody goes through these factors and they say, no, you really look more like an employee, you may be responsible for then catching up on everything you were supposed to do with the employee, like paying the taxes that you didn't pay, or meeting certain requirements, or meeting certain pay requirements, or doing that sort of thing. One of the examples in the news recently here has to do with the transportation companies like Uber and Lyft. There's a big lawsuit about whether Uber is allowed to classify its folks, its drivers, as independent contractors, since they start and stop their schedule when they want. They complete the driving routes as assigned, but they're using their judgment about where they want to start and where they want to stop their clock, so to speak. Not in terms of where they pick somebody up, but in terms of what area of the city do I want to sit in, what area of the city do I want to end up in. They provide their own tools. They are paid at a set rate per mile, not necessarily a certain amount per hour, which means they're not necessarily being paid minimum wage per hour, especially when they're paying for their own gas and some of their own insurance requirements. So there are legal disputes going on. Actually, California is trying to change some of the classification of the employees, or classify them as employees. You may also hear things about the gig economy or the contractor economy. There's a lot of online sites like Upwork where people will offer their services as independent contractors. It's becoming more and more prevalent, especially for remote workers, but can be for across all kinds of different industries. You can have contract attorneys who work on a particular case for a short period of time because you need an extra pair of hands. You can have a contract accountant who comes in just for tax season to help you do X, Y, and Z and then goes back out. So it's definitely something that's becoming more and more prevalent, but regardless of how you phrase it, regardless of whether it's through Upwork or some other platform, you need to make sure that you're actually on balance treating them like an independent contractor, not treating them quite so much like an employee. One of the cleanest ways to do that, and sort of a cheat sheet you could have for this, is have the contractor form an LLC or a business of their own. That way, what you're doing is you're entering into a contract with the LLC rather than entering into a contract with the person to be a contractor. LLCs are not people. They cannot be employees. And so by entering into a contract with an entity, it is by its very nature a contractor, right? Or a vendor, not an employee, because there's no direct hire and fire ability. The entity theoretically has the power to choose whichever of its employees they need to fill the contract, et cetera. Make sure it's not a sham entity, make sure they actually set it up and they actually do the banking separate and all those sorts of good things. Don't just paper it, because the courts will ignore things that are just pretend. But it can be a good way to get around this barrier. Questions about employees versus independent contractors? I see in the chat box that there's at least one brave soul who wants to ask who I am and why I'm rambling about employment law for a long period of time. So now is as good a time as any. I will throw that in there. My name is Brandon Harter. I am a partner with the law firm Russell, Krafft, and Gruber here in Lancaster. I practice in the areas of business law, employment law, and litigation. Litigation meaning courthouse fights about the previous two topics, business and employment law. I have been working with SCORE for a number of different years, helping to teach some of the simple steps workshops, and am using this as another opportunity to help present some useful information for SCORE's startup folks, whether they're here with us live today or watching this video at some point into the future. And I will tell you that following a lot of these rules and doing a lot of these things, it's a lot cheaper to do on the front end with me wearing my business hat or my employment law hat than it is to wait until I get my litigation hat on. Because a lot of these things, once you're in the litigation mode, become quite a bit more problematic for you to work with. So if I had to give a piece of advice on that, I would just say in general, if you're not sure about an issue related to employment, it's usually better to talk with your attorney before you do something rather than after. Because once you've fired somebody, once you've demoted somebody, once you've made a decision, you know, the bell's sort of rung at that point, and you may have to go through and deal with the consequences that come through there. So that's a little bit about me, a little bit about my background, and a little bit about why I am yammering at you about employees. Speaking of classifications, let's dive into exempt versus non-exempt and that classification. So this is for classes of employees. There's no such thing as an exempt independent contractor or a non-exempt independent contractor. Although, remember what I said a minute ago, if you've classified someone as an independent contractor and it's later determined that they were really an employee, then this designation will also apply to them. But for purposes of this discussion, let's look only at employees and exempt versus non-exempt. So the first thing to understand is exempt from what? And exempt versus non-exempt means you're exempt from the overtime requirements, the requirements to pay time and a half for hours in excess of 40 within a given week. So exempt employees are employees who you do not need to pay overtime to. Non-exempt employees are the ones who you do need to pay overtime to. In general, I recommend that you assume that an employee is non-exempt unless you can satisfy one of the tests. The Fair Labor Standards Act, the FLSA, is where these requirements are met. And in general, to be non-exempt, it requires you to be engaged in a bona fide executive, administrative, or professional capacity, and that you have to be paid on the basis of a salary of at least $35,568 per year is the current standard, $684 per week. So what does that mean exactly? What is bona fide executive, administrative, or professional capacity? And I will say I'm glossing over here a little bit. There are some other categories, computer services, some other things, but let's try to stay at a relatively high level here for purposes of exempt versus non-exempt employees. Here are some examples in the exempt, non-exempt world. So exempt individuals might be like the president of a company, right? They're likely to satisfy the executive tests. They have oversight over broad areas of the business. They have authority. They're salaried. They're sort of paid to get the job done, regardless of whether that's 40 hours a week or 50 hours a week, probably not required to get overtime. Your office manager probably qualifies in the administrative category. Administrative meaning they have oversight, usually the power to hire and fire, or otherwise supervise 2 or more employees underneath them. So there's other employees that they're watching over, so they're administering in that manner. Professionals, lawyers, doctors, accountants, licensed individuals are often exempt. They're paid by salary, and so you don't have to necessarily take your licensed individuals like that. There's professionals and pay them overtime, time and a half. And outside sales, meaning sales people who are most of the time out on the road conducting sales or out of the office, at least, conducting sales. A lot of times these people are paid on sort of a hybrid pay plus commission model, generally not keeping overtime hours, a mindful thing for those sorts of people. Who's non-exempt? Workers who are paid hourly. Remember that paying by salary is one of the requirements. Frontline workers who don't have supervisory duties, generally administrative staff, Your paralegals in my office, or your secretaries, your receptionists, are generally going to be non-exempt employees. And while outside sales tends to be exempt, inside sales, people who are staying in your building, tend to be non-exempt employees. Again, this is one of those where if you goof it up and you classify somebody as exempt and they're not, you can end up having to pay wages that were not paid correctly, overtime wages that were not paid correctly. This is a good opportunity to slide in here my plug for anybody with an employee or somebody who might be classified as an employee. Please be mindful of the wage payment and collection law here in Pennsylvania, or similar federal standards. Essentially, if you are the person who decides to pay another bill other than taxes before you pay employees, and the employee doesn't get enough money, you are personally liable in addition to the company for those unpaid wages. So if you're the vice president who's in charge of the payroll, and you have two bills on your desk, one is for the electric, one is to pay the last week of salaries before the company goes under, you pay the salaries first, then you go over and let the electric company do what it's going to do as you go through and carry on those sorts of activities. Same thing is true for if you paid them hourly for their 45 hours of work but didn't pay time and a half. You're again shorting them wages, just like you chose not to pay the wages in the first instance. And so in those instances, you want to make sure that you are taking care of the non-exempt people correctly. And when in doubt, a lot of people will treat them as non-exempt. I will also say exempt versus non-exempt relates to whether you are required to pay overtime. It doesn't say whether you can pay overtime. So there are businesses with somebody who might qualify for one or more exemptions under the law, and you choose to pay them overtime for equity or to incentivize them to do the extra work, or they do their other sorts of activities. There can be policy reasons, practical reasons why you want to be able to do these things kind of above board, or just do it in a way that makes people happy. Let's talk about a few common employment myths, and I would love to see some questions and answers, something that you've heard about employment law, something that you think you know from your years in working, something that you're curious about. It'd be great to get some questions and answers in here as we start to go through common employment myths. Before I switch over to that, I do see I have one question in the chat indicating that even in a small office where there isn't anyone underneath them, there can be a qualification for administrative exemption if they have authority over their area of work. Yes, that is correct. The administrative exemption, one example of it is the one I talked about, having oversight over their individuals. It is not the only test for administrative. There's multiple different prongs there, just like there's multiple prongs in the other ones. So you're going to want to look specifically at your circumstances and the specific language in the FLSA, or have your lawyer or your mentor help you with it to make sure that you're testing the right standard. That's part of the danger of presentations like this, where you're trying to give a very broad overview of what's going on with employment law in general. And when you're categorizing something as one way or another, some companies that have 3 employees have a couple who are exempt. Some companies that have 3 employees, nobody's exempt except for the owner. And the owner is the only person who would meet the exemption. And obviously the owner is not necessarily an employee in an LLC. So it really depends on the entity and what's going on. Common employment myths. Myth number 1, paying employees small amounts under the table is okay. You can probably guess that that's not, because it's on my list of myths. Technically speaking, from the first dollar that you pay an employee, you're required to collect taxes and remit them and do all that sort of good stuff. I'm not saying it's not common. There are some people, especially if their son or daughter is working for you in the summer or doing something else, that there's people who do that. This is another one of those times when people try to classify what is really an employee as an independent contractor, so they don't have to withhold taxes and do that sort of thing. But no, paying somebody under the table is not permissible, and it can lead to a number of different problems. One of the most common ones that I see is that someone later on accuses the employer of not paying their wages. So somebody was paying them under the table in cash over a period of time, then some falling out happens. The employee gets fired for some reason, or they get let go for some reason, and they're bitter about it. And they come back and they say, hey, I wasn't paid for 6 months. You owe me 6 months of wages, penalty interest, and my attorney's fees under the wage payment and collection law. Well, you're going to have a hard time proving that you paid them correctly if you paid them all under the table in cash and you don't have records of what's going on. And if you did pay them under the table in cash, the scrutiny of raising that claim in a lawsuit may get you in hot water with revenue anyway to go back and try to collect the taxes that were supposed to be remitted. So in general, I advise people don't do this. Don't pay people under the table unless they're truly independent contractors. Otherwise, you need to run them through payroll. You need to have the taxes withheld. You need to take care of all those different opportunities. Now, this is a little bit of an area where, like the collection of sales tax, there is a practical element to this as well, right? So if somebody comes in and works for you for one weekend and you've paid them $100, what's your risk really of going through and getting dinged for that, or what's the exposure you could have on the back end? And I get that. I mean, as an attorney, I'm always going to tell you this is what the law requires you to do. That's up to you if you want to run the risk that that's not going to work. But as I said, this is sort of like sales tax. If you buy something, via eBay out of state, you as the purchaser are supposed to remit sales or use tax to the Commonwealth of Pennsylvania based on that purchase. Even if the seller wasn't required to collect it, it doesn't mean there's no tax on the item. It means that the seller wasn't required to collect it and you're supposed to submit it. Does everybody do that for online purchases? No. Does revenue go around kicking everybody's doors in for it? No. So at some point, you're making a practical decision about whether to go forward with it or not. But from a legal perspective, paying somebody under the table, not permissible. Number 2, salaried employees are not entitled to overtime pay. This is what we just went over on the exempt versus non-exempt list. Hourly employees are entitled to overtime pay. That part is true. But the inverse, that salaried employees are not entitled to overtime pay, is false. That is not accurate. There can be salaried employees who don't meet the qualifications. You could have somebody who's salaried at $20,000 a year. That's not a sufficient salary to exempt you, so overtime is going to be required. They need to still track their hours, and so you'll pay their salary, and then for hours over 40 in a week, you'll calculate back into a per hour from the annual salary, and you have to pay time and a half for those additional periods. Similarly, you could have a salaried employee who doesn't meet one of those qualification tests. So while the flip is true, hourly are entitled to overtime, salaried employees are not necessarily entitled to it. Third one on here, the company must give 2 written warnings and a good reason before firing somebody. This one comes from what is sort of a standard employment law practice, and I'll talk about why it's a standard in a second, an employment law, an HR practice. But no, it's not the law. The law in the Commonwealth of Pennsylvania is that employment is at will, meaning that at any time and for any reason, caveat with a little asterisk there, we'll come back to the any reason, the employer can fire you for any time, for any reason, and the employee can quit for any reason. There's no requirement for a first or second chance. There's no requirement for a written warning. There's no requirement that be an offense. You could have your employer walk in and say, I don't like blue socks, you're fired. You could have the employer do something really dumb, like saying, I think your job can be done simultaneously with Joseph's job, and so I'm firing you, and Joseph gets both job descriptions merged together into one. You're allowed to make stupid business decisions. You're allowed to make arbitrary decisions, not illegal. You don't have to give written warnings or go through and do that sort of thing. What you can't do is you can't violate either a written contract if you've promised them a certain term of employment, or you can't do it for an illegal reason. These are the things that we're generally familiar with, like the discrimination laws. You can't fire someone because of their race. You can't fire someone because of their ethnicity or their religion. You can't fire someone because of their gender or because of a medical condition that they have that's qualified as a disability. You can't do it as retaliation against somebody for reporting you to, the Fair Labor Standards Board, or for reporting you to the for safety inspections or safety violations to officials. So there are reasons why you can't fire somebody, or refuse to promote them, or refuse to hire them, or demote them, or do all those sorts of things. But in general, there's no, as long as you stay outside of those things, there's no requirement for anything in advance. So why is this an HR thing? Why are we giving, either a verbal warning, a written warning, and then termination, or you're doing a verbal warning, a written warning, an improvement plan, and then termination, or some combination of 2 warnings and a termination? The reason why you're doing that is a protection against the potential for a discrimination lawsuit. So let's walk through what happens. You have a disgruntled employee because they're not doing what they're supposed to do, and you fire them. You don't give them any advance notice. You just say, this isn't working, you're out, you're done. They stew on this for a week or 2, and then they decide, you know what? I don't think that was right. I don't think that was fair. I'm going to sue you. I think you fired me because I fall into the class of having a protected disability. Well, if you fired them the way that I just talked about, now it's going to be, their word against yours in terms of what the reason was for firing. They're going to suggest, with what's called a prima facie case, that I have a disability and it was because of that. They knew about it and they fired me for it. You're going to push back and say, no, it wasn't because of that. It was because of this good reason. And then you're sort of, rolling the courthouse dice in terms of who's believed between the 2 of you. Hopefully, if you've got a great legitimate reason, it works. If it was kind of an arbitrary reason, it can be more difficult to prove, but it could be that you just really don't like people who talk in a certain way to you. They're disrespectful, or you don't like a certain kind of dress and they don't change it. Those sorts of things, so long as they're non-discriminatory, are explainable, but they're a little harder to find. So the defensive way to do this is to write them up, right? I've given you a verbal warning that says you're not doing what you're supposed to do. I've given you a written warning that says you're not doing what you're supposed to do, and now I've fired you for it. Now you've got documentation in their personnel file that I told you once, I told you twice, you're out, that this was a problem, that gave you a chance to fix it. It doesn't make it more lawful or less lawful. It makes you have stronger evidence about an issue. This is no different than you have a landlord-tenant relationship. You could call the landlord and tell them, hey, my sink is broken, please come and fix it. Or you could send an email. Well, the email is going to give you a written record you could show later and say, yes, I told you about it on this date and on this time, and you responded saying you were going to fix it. Some instances, it's good to have that additional paperwork so that you can go through and do it. And there's no particular science in terms of written warnings versus verbal warnings. The only thing I will say is, in general, pick a system and stick to it. Don't give one employee written warnings and then terminate them and the other one none. Treating them unequally, is a thing that makes it look like you're doing something in a discriminatory fashion or you're otherwise trying to cause problems. So be careful doing that. You want to follow whatever the procedures are, whether it's in a handbook or it's a one-page sheet of paper, or you've just written down some notes somewhere that say we're going to give 2 warnings. There can always be exceptions, right? So you might be a business that normally does, here's your verbal warning, here's your written warning, and now I'm going to fire you. But they came in and they just punched your manager in the face, like just knocked them cold. Okay, like I'm not giving you advance notice that was inappropriate. It's pretty obvious that a criminal assault, criminal battery on work grounds, on work hours is not okay. You're out immediately, but then you're also not as worried about getting sued over the issue because it's pretty obvious what it is that they got fired for. I could dive much longer into discrimination stuff. I'm going to try to stay from going too far in those weeds. If anybody has questions, feel free to let me know, and I'm happy to circle back. Next myth that I have on here is that having someone work from home permanently makes them an independent contractor. So no, you can obviously have employees who work from home, part-time or full-time. You can have independent contractors that are in the office. So it's not definitive. There's not a clear, bright line that says if you work out of the office, you're a contractor. If you work in the office, you're an employee. It's a factor though, right? If the independent contractor is never in the building, They're probably not using your tools. They're probably not using their equipment. They might be less controlled on their hours. So you're leading down the factors towards making somebody an independent contractor. But you can also imagine an employee working from home who doesn't meet any of those factors. They're on a laptop that was sent to them by the company. They're working from 9 to 5, and they have to be clocked into Microsoft Teams during that whole time and answering messages. And they're following the procedures that are set forth by their managers. They are hourly employees, and they, go to the normal employment activities, and they're given performance reviews and all of the other factors that we talked about. They just happen to be doing it from somewhere else. Their satellite office tends to be at home. They can still be an employee to do that. Other questions and answers, or questions, I should say, common employment myths that people think are correct, and in reality, not so much. All right, I got a couple coming in. First one, Jim, what do you need to challenge an unemployment compensation claim? So unemployment compensation is a little bit different than a discrimination claim. A discrimination claim is that you as the employer did something wrong and therefore are required to make that right by paying wages or giving them their job back or doing whatever. Unemployment compensation is a Pennsylvania-based program here, although it's some federal funds into it, that says when someone gets laid off, they get assistance, unemployment assistance, for a period of time that is in some way related to the compensation that they were getting based on a formula before they left. An employee, by default, is entitled to unemployment compensation. So if it was one of those purely arbitrary filings, I don't like your blue socks, you get fired, the employee is going to get unemployment comp. If it was because you needed to downsize, the employee is going to get unemployment comp. The only time they won't get unemployment comp is one, if the employee resigns. If they quit, they won't get it. Or two, it has to be for a heightened level of cause, something that's almost to the level of egregious. So the example of punching a manager in the face is probably something that would get you disqualified for unemployment comp. But in general, not doing your job is not a challenge to an unemployment compensation claim. They're still entitled to it. Unemployment compensation is a fund that you're paying into as an employer as soon as you got your first employee. And the amount that you pay in can relate to how many claims have been made against your company. So in part, that's one of the reasons why businesses want to challenge unemployment claims. Even though the claim itself is being paid by the Commonwealth, your contributions for that and for future contributions are impacted by the number of claims that are filed. Unemployment compensation claims, the procedure is that the employee files it with the Unemployment Compensation Office. A form gets sent to the business, who then has to complete some information like dates of employment, the reason why they were terminated, whether they quit or whether you fired them, what their last compensation was, etc. Based on that information provided, there's an initial determination made that can be appealed to a referee, who then has the opportunity to hear testimony from both sides. You get word of a notice. You go down to the Unemployment Compensation Office in Lancaster. It's downtown. You can go with an attorney. You can go without an attorney and present evidence for, yes, this was somebody who was really terminated for cause, or yes, they resigned. Don't listen to them. They were the ones who quit, so don't give them unemployment compensation. And then there's levels of appeal that go up from there. But that's the last sort of fact-finding level where you're submitting testimony and evidence. I would say most employers, in my experience, go without an attorney, but you can bring one with you. Most claimants go without an attorney, but again, you can bring one with you. You do have to be careful, though, because you're set with whatever the record is at that referee hearing. So if you forgot to bring up a piece of evidence, or you didn't meet some standard or some requirement, that can be a problem. I will also give one caveat on the resignation thing. There is also an exception, sort of like there is in the discrimination world generally, that if your resignation was essentially forced, if they made it so bad that you couldn't stay, or they said resign or you're going to be fired, and you resigned for the purpose of sort of saving face, or not having a black mark on your resume. In those instances, it looks like being fired, it quacks like being fired, so it is, being being fired. So it will be considered as such for the unemployment compensation. So don't rely solely on the fact that they quit. Make sure there wasn't something that forced them to quit as you're going through. Another question that we have in here. Are there any specific considerations for part-time versus full-time employees? So part-time versus full-time generally matters when you get up in the size of employers and you're required to provide healthcare or do those sorts of things for one class of employees or another. There is no specific requirement for all purposes as the number of hours. Generally speaking, if they're working 35 or more hours per week on a regular basis, they're full-time. And if they're less than that, they're part-time. But regardless of full-time or part-time, you could have a salaried exempt part-time worker. You could have a full-time non-exempt hourly worker. You can mix and match those other categories. It's not necessarily tied together in terms of exempt or non-exempt or contractor or employee. Those things, a part and full-time is a measure of how much is worked, and then it triggers certain other things, like I said, healthcare. It's not necessarily a legal requirement in terms of compensation doing those sorts of things. Besides legal treatment of employees versus contractors, are there accounting considerations that a small business owner should work on with their bookkeeper or accountant? Absolutely. In fact, down to the level of whether you're an LLC or an S Corp is in part because of the, tax considerations about what go on in there. There's also a ton of other things that you should be working on with your bookkeeper or your accountant. There are definitely things that you need to track in terms of payroll. There's things that you need to track in terms of all manner of different things. I won't go too far into the weeds on this one just to try to keep us on track a little bit. But there's definitely all manner of things that need to be done. The taxes and the tax consequences are definitely a part of it. But maintaining a working relationship with your professional advisors generally, especially your accountants, is very good. For anybody who's never heard my spiel at the end of the been punished, I should say, to hear my spiel during the workshops, if you have to pick, your trusted advisors, your SCORE mentor should be first because they have the best general knowledge and are free. Your second professional advisor should be your accountant, who you should be working with closely, or your bookkeeper on all things, because you're going to need them come tax time. You're going to need them for all their different kinds of reporting purposes. And then pick a third professional advisor, lawyer, banker, insurance agent, depending on what your particular business needs. So, in general, keep the accountants even closer than the lawyers. They are very important. Another myth that a lot of times comes up is that you're not allowed to talk about your compensation. You're not allowed to talk about your salary, whether or not it's in the employee handbook. It's just a rule that everybody follows. It's actually false. In fact, if you put in your employment handbook, employees aren't allowed to talk about salary, you're actually in violation of federal law. The Fair Labor Standards Act actually prohibits you from telling employees, don't talk about their pay. It's considered anti-union activity, even if you don't have a union. And so you actually cannot prohibit, punish, discourage, tell them they won't get bonuses if they do. You can't tell them not to talk about their pay. Now, you can't, employees generally may choose not to do it anyway. There's just a social, norm or a social stigma about sharing your compensation with others. But as an employer, stay off it. Don't tell them that they can't talk about it. You can get yourself investigated by the feds that way, and it's an expense for going through. What if I realize that I wasn't accounting for an employee or contractor correctly? Can I make a correction at that point and realize that the problem for handling them going forward, or do I need to go back and address the time where I was classifying incorrectly? So definitely fix it going forward, because if you're aware of the misclassification and you don't take actions, you're now committing a willful violation, which exposes you to higher levels of penalty under the wage payment law. So yes, fix it going forward. The answer going backward is really a risk tolerance thing. The law requires you to go backwards and fix it, but you're sort of gambling, am I going to get sued over it? Or am I going to get investigated over not doing this correctly? I generally encourage employers to go back and fix it. They just need to have things teed up the way that they need to be. And so, I would say go back and fix it, back to the statute of limitations, at least back a couple of years. But that's up to the individual business. I mean, they would basically have to get sued for not paying them correctly to go backwards, or you would have to be chased by revenue for taxes that you didn't collect going backwards. But that's always a risk. I mean, if you get audited for some other purpose and they go back and they see 4 years ago that you weren't paying your taxes correctly, they'll come after you for it. So it's sort of a risk tolerance thing. I generally say go back and fix it or clean it up to make it more clear that they're an independent contractor. But yeah, there's no, oops, I didn't know as a defense, and I don't have to fix what's retroactive. We started bleeding into this a little bit, but let me talk just very quickly about regulations as you grow. As your company grows in number of employees, more and more laws and regulations apply to you. So examples generally, and this is a big overgeneralization, but to give you a sort of idea of some of the different thresholds. As soon as you got your first employee, you're worried about workers' comp, you're worried about wage payment and collection, you're worried about unemployment compensation. As soon as you get your fourth employee, you're worrying about the Pennsylvania Human Relations Acts on discrimination. 15th employee, Title VII is going to start to apply to you. So there's a period where you may have Pennsylvania discrimination law, not the feds. You have 50 employees, you may be able to comply, or you may need to comply with, or you will need to comply with the Family Medical Leave Act, giving people unpaid leave for up to a number of weeks if they've been there for a year and they need to take care of themselves in a medical issue or a family member, and if you give them the position when they come back. This often comes up in instances where a spouse has some terminal diagnosis and they're out for a period of time. Parent has a diagnosis and they're out for a period of time. It also comes up in pregnancy cases if somebody's out for a period of time. So you got to be careful for some of these statutes. But they don't all necessarily apply to you with your first employee. So start with unemployment compensation, workers' compensation, the categorization of exempt, non-exempt, the categorization of contractor and employee. Start with those first, and then keep in mind with your professional advisors that as you get bigger, some of these other laws start to apply to you. Question in the chat: do exempt employees need to track hours? So the technical answer to the question is no. An exempt employee is not going to be paid based on overtime hours. They don't technically need to record it. Assuming it's not a profession or something where you need to have the hours for billing purposes or that sort of thing. There's not a requirement. I don't recommend you do it. I recommend that you have the exempt employees keep at least general track of their hours, maybe not to the minute, punch in, punch out, but I would keep it. One, if you end up being wrong for some reason and they end up being non-exempt, you're going to want to know how many hours they worked and how much overtime they worked. Because otherwise, again, you're going to get into a they said, you said kind of combination where they'll claim that they worked 20 hours of overtime every week and you don't have any contemporaneous records to show they didn't, and you sort of get into trouble. It's also good for business planning purposes. You want to know how much am I paying this person and how much work do they have to get done? Are they able to take on more work? Are they already overloaded? Do I need to bring a second person in? If I'm hiring a new person to replace them, what kind of workload are they going to have? So I generally recommend for practical purposes and as a defense in case you end up guessing wrong or interpreting wrong on exempt, non-exempt, that you track hours. But there's not the technical requirement because there's no overtime trigger that you run into. Last but not least, I will throw out watch for special restrictions that may apply to your industry with respect to your employees and what's going on. There may be licensing requirements for some of your employees, which you're responsible for making sure are in place. Lawyers, accountants, doctors are obvious, but hairdressers, certain kinds of engineer, tattoo artists, there's lots of different industries that have licensing requirements or certification requirements. Make sure you know what your employees have to have. Be on the lookout for local minimum wage or local leave requirements. They may require that employees in the city make a certain minimum wage that's different than the federal one or different than the Pennsylvania one, so be aware of it. Also, watch out for limited time programs. 2 years ago, it was big with the CARES Act and what the limited time restrictions were with COVID. The PPP program also had its own requirements that were applying. And the PPP also doubles here into the contractual requirements. If you're working with a governmental entity, if you're receiving grant funds, if you take PPP money, you're agreeing to be bound by certain additional governmental restrictions. So maybe you're not big enough to trigger the Family Medical Leave Act. You don't have 50 employees, but you've taken grant money, which says you have to comply with all federal law regarding employment. Well, you may have volunteered to have those laws apply to you, even if they would not have otherwise normally done so. So just be aware that sometimes you're going to also add in contractual requirements. You can also get these if you sign an agreement with a customer and you promise to comply with all, federal or state law regarding something, even if the law doesn't say it applies to you, you're sort of opting in to do it. All right, that's it for me in terms of the slides that I have prepared for today. But we do have a couple of minutes left here. If there are other questions related to any of the employment law topics that we've gone over, if anybody has any other myths, any sort of, well, I always thought this was how, this had to work, and can you do X, Y, and Z, and what's going on with that? I'm more than happy to answer some of those questions. Another one that came to my head that people often get confused about, which is the timing of different kinds of documentation in terms of non-competes and handbooks. In general, the employee handbook can be modified at any point in time and takes effect when they tell you about it and you've received a copy of it. Even if it's mid-employment, they could change, the dress code and say, look, now you're going to be required to wear a tie, even though you weren't before. And that's generally going to be enforceable. Again, the employer could choose to fire you for not complying with their rule, even if it was arbitrary, and that's generally okay. It's a little bit different with non-compete agreements. Non-compete agreements, because they're not favored in Pennsylvania, require consideration, meaning you have to be given something in exchange for signing up. So you can have one at the outset of employment, that as a condition of employment, you must meet this standard. That's definitely possible. But if somebody is already employed and you just walk over and hand them a confidentiality and non-compete agreement, the confidentiality portion will be enforceable. The non-compete portion in general will not, unless you gave them some money in exchange for it, doing those sorts of things. So just be mindful that different documentation can be provided at different times, and it changes what's going on with the various different, I lost the word, various different enforceability of those documents. Another question we have in the chat, what are the guidelines for providing employee benefits, health, 401k, et cetera? So in general, you're going to want to think of employee benefits as something that you can offer as an incentive for somebody to come work for you, not as a requirement, with certain legal exceptions. So there is not necessarily a requirement that your first employee you hire, you provide health insurance for, right? You have to get to a certain threshold of employees before you're required to provide health insurance as an option. A lot of employers start to do it as they get bigger, just because it's competitive going back and forth in terms of number of days for vacation and that sort of thing. But it generally is, you're not required to do it unless you get big enough that you cross a threshold that the law now says you have to do it. So there's different thresholds for health and all that sort of thing. So, talk to your advisors, talk to your lawyer, and they can talk specifically about, okay, are you close to or at the threshold where you have to offer those things? But it's not a general requirement across the board that you provide those sorts of benefits. A related thing that a lot of people get correct out the gate is what happens if an employee who's fired has vacation days left. You actually have the choice as the employer whether to have a policy of paying those days out or having a policy of not paying them out. The important thing is you have to have a policy and be consistent with it, but you could have a policy that says you just lose unused vacation days when you resign or when you're terminated. You could also have a policy that says we'll pay you as though you worked those days, in your last paycheck. If you have a policy for doing it, and you don't do it for an employee, it's a wage payment and collection law problem because it's an element of wages that you didn't provide them. But if you have a policy of not doing it, then you can just choose not to do it. Again, just be consistent. Inconsistency gets employers in trouble as much as anything else on this list. Inconsistency where you say one thing in the handbook and you don't actually do it. You say one thing in a policy and you don't actually do it. You pay out vacation for this employee, but not for that one. Consistency is generally important. So half the time you're writing these things down, not just for the employees to know what the rules are, but for you to remember what the rules are so that you're doing it consistently time over time. About 2 minutes left here if there's any other questions. And if not, it was a pleasure talking to you guys today. My contact information is up there on the screen. Always happy to have follow-up with any SCORE mentors or with any SCORE clients who are coming through, who have quick questions that they need to be able to go over, or is this something that's going to need a longer consultation with a lawyer? So don't feel obligated, but certainly also don't hesitate to reach out. I will also throw a quick plug in for our firm's blog. It's the lancasterlawblog.com. We keep a number of different subject matters in regular rotation. So throughout the pandemic, for example, we had a lot of postings about the CARES Act and the employment requirements and those sorts of things. So as things change in the law, we often keep updates there. We have not just employment law, but a variety of different topics, but there are some great employment law ones on there if you want to go and take a look and learn a little bit more.
Brandon and participants, this is Steve Engel from SCORE. I want to thank you, Brandon, for an outstanding presentation. I owned a business and I thought I knew all about these things. And now I find out I knew maybe 1/2 of what I know now. Thank you so much.
My pleasure, and it was a pleasure being here with you guys today.
Thanks again to everybody who participated. Keep track of the webinars that are coming up. We do this every third Wednesday at noon. Good day to all of you.